Hey Team GCI, welcome back. My name is Brad and today I've got a very special video for you. I hope you find it special anyway. Every Friday, I and some banks and some other individuals are asked to do a forecast for FX Street. So we look at all the different currency pairs, we look at gold, we look at oil, and we look at Bitcoin, and we try to, with the best technical analysis and fundamental analysis, get some idea where it's going to be a week from now, next Friday, 30 days from now, and 90 days from now. It's not always easy, and to be honest, Friday is probably the worst time to do forecasts, but that's what they want. FX Street uses this data to give to their clients and to display on their website. So I'm privileged to be part of this elite group to do this, and I thought I'd share it with you on the GCI platforms, the Facebook group, YouTube, and the GCI website. So this video may be a little long for you, but don't worry, you can skip through bits. I'm going to be breaking this down into 3 sections because the one thing I need to do when I'm doing my forecasts is to use the GCI MT4 platform, of course, but it's important that I use the same templates and a profile when I'm doing my forecasts. So let's take a quick look at that first. I'm going to show you how to set up templates and profiles on MT4. It's very simple, but once you start, you'll be addicted. I mean, I work in profiles all the time. That's all I do is work in profiles. Let me explain what that means. If we take a look at the chart that's on the screen now, you can see down below in the tabs, I've got a variety of currency pairs set up. So if we take a look at this, this is euro dollar, and I've got some trend lines drawn. I've got the Parabolic SAR, I've got the Stochastic Oscillator, and I've got MACD. Well, anyone who knows me knows that I'm in love with the Stochastic Oscillator. I find it the most valuable technical indicator that is available on any platform. Of course, that goes along with support and resistance and trend lines. So once you watch my videos for a few weeks and months, you realize I'm not a one-trick pony. I definitely look at fundamentals before I look at technicals, and that's really, really important. And I'll explain that as I go along in the videos and every week. But I really, really find the Stochastic Oscillator to be very, very invaluable. And we'll be doing some educational videos on that and other indicators, how to backtest, how to use it on different time frames, and so forth. So let's get back to our platform and how we do forecasting. You'll notice that all of these charts are on the weekly mode. And the reason they're on the weekly mode, I want to look at the big picture. I generally don't use the weekly mode when I'm trading, unless I want to see, again, the big picture. But to do forecasting, it's quite invaluable. And I'll show you what that means as I go along. So basically, I've got here euro dollar. So here are all the pairs that we look at. There's euro dollar, there's pound dollar, there's dollar yen, dollar Swiss, Aussie dollar, New Zealand dollar, or Kiwi dollar as we call it, dollar CAD or loonie, euro yen, pound yen, euro pound, gold, and we have WTI, which is basically US oil. WTI stands for West Texas Intermediate. It's also called NYMEX and a variety of other names. We can just call it WTI or US oil. You'll know what I'm talking about. As opposed to Brent crude. If you've done any trading on Brent crude, you'll notice that the chart platforms are almost identical. Brent crude is typically a little more expensive because it takes a little bit more to get it out of the sea as opposed to pump jacks in Texas and Oklahoma. But we'll be going into a lot more detail on trading oil in the near future. And also we look at Bitcoin, but I'll use a different chart for Bitcoin. So let's go back to the beginning. So if I'm doing a forecast on euro dollar, again, I want to look at the weekly chart, but let me show you how I set up these templates and these profiles. So let's go to a clean chart. And I'm going to my default on MT4. And here on default, I have gold, which is basically on the GCI platform, GOLD. And this is the 4-hour chart. I generally like to use the 4-hour chart when I'm doing my analyses midweek, and you'll see my videos normally using 4-hour chart. And I will tell you if I'm changing charts, and there'll be a big display on each chart saying XAU, USD, H4, or H1 for the 1-hour chart, or D1 for the D1 chart, etc. I will make it painfully obvious to you, because it's really important that you understand how to trade on different time frames. Obviously, I'm not going to be using 5-minute and 1-minute charts on my analysis because the video will be out of date within minutes. So I typically use the 4-hour chart on my midweek, pre-week analyses, so you've got some context to trade with. Definitely, if you're a trader who likes to scalp, use the shorter time frames. If you're a position trader who likes to trade longer time frames, then by all means, take a look at the dailies and the weeklies. And again, we'll be having videos in the future looking at the different styles of trading and how to trade these things. Okay, so let's get back to our chart. Here we have gold on the 4-hour chart. So what I want to do is to set up my template exactly as I have it on my my analyses for my monthly, weekly, and quarterly charts. So I'm going to go to the weekly, as I said. So W1 is for weekly. Each candle represents 1 week of price action. So let me just set this to offset a bit. So I've got some space on the right to play with. Okay, so now what I want to do is set up the indicators that I like. So let's take a look. Let's go to, let's put up the MACD. And feel free to adjust it. Let's say I've got silver and red. I kind of like that. I want to make sure my lines are nice and thick so I can see them on my videos. And here we have MACD. And you can actually change the height. Oh, maybe you can't on this one. There we are. You can change the height of each indicator in a separate sub-window if they are in these windows. Okay, the MACD on other platforms may be different than MT4s. I typically like the MT4 MACD indicator, and I'll tell you why. Basically, if you're familiar with MACD at all, you've got a zero line, which is basically mid-range. And I won't go through all the details of how the inventors of MACD calculate their indicator, but basically these stripe lines are called a histogram, and the red line is called a signal line. And again, I'll be doing other videos on indicators to go into much more detail on how the math works and how you can use that to your advantage. Basically, anything below the zero line is considered bullish. So if we take a look at some of our, let me just get a quick, here's something else I can show you about how to customize MT4. I want to be able to draw rectangles, so I'm going to insert that in my toolbar. So here I have a rectangle. So here we can see we have the histogram all below zero. And if we compare that to the price action above, we can see that, yeah, it's definitely in a bearish trend. It's going down. So when MACD tells us on the weekly chart that everything is below zero and we're in a bearish mood, you can see that definitely price action is doing just that. Let me get rid of these indicators, these rectangles. Something else I'd like to show you now. Let's click on the crosshairs. Okay, you can see here where the signal line exited the histogram, right about there. Okay, so put our crosshairs on there, and you can get the crosshairs by clicking on your mouse wheel, by the way. So line up your crosshairs with the point where the signal line exited the histogram on MACD, and look what happened. Price suddenly changed its attitude and got very, very bullish. So using this particular indicator, and you'll see me on videos many times saying, and the signal line is about to exit the histogram, it's important. MACD doesn't always work on every time frame. So it's one of these situations like Fibonacci. Turn it on. If you don't like what you see, turn it off. I know that's not very technical and very scientific, but it's the truth. So in this case as well, let's take a look at another instance where we had the signal line exiting the MACD histogram. I'll put on my crosshairs, and you can see exactly what happened. Right about this point corresponds with what happened on MACD, and sure as anything, price suddenly got very, 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 very bearish, and it worked out really well. So you could have entered on a trade here and exited on a trade down here, and you would have made a fantastic trade. Everybody would be proud of you. So would your account. You would have bagged, let's see, you would have bagged, in the case of gold, about 300 pips. So that would have sent price from, if I can just quickly take a look, $1,926 down to $1,640. So That's a long trade, obviously. That took many, many weeks. Don't forget, these candles are week long. You have to be very, very patient to take a trade like that. That's called position trading. Not many traders have that kind of patience. And also, to be honest, the swaps might have eaten up your trade, but it would have been a good trade anyway. And the same thing would have happened here. Let's say you got in at this point. You decided you wanted to go and be bullish. And if, again, there are a couple of ways to exit the trade, but let's say you waited until the signal line exited the histogram way up here. And again, using our crosshairs, we can see where we are. And look at that, it's absolutely perfect. You're almost near the top of the market. So again, that would have been an even better trade. But it takes a lot of patience to trade this kind of trade. So we had price action getting in at around $1,650 and getting out at 2017. Again, that would have been the trade of the century if you had your patience and held on that long. So that's, again, I'm going to repeat, that's called position trading, holding on for a long, long time. But let's get back to our point. So let me get rid of all these rectangles. So that's a bit of the story on the MACD. Sometimes it works, sometimes it doesn't. In a case like this on on gold weekly chart, it worked out really well. So let's add our another indicator, and we're going to use my favorite, as I said earlier, the stochastic oscillator. Okay, so I can change my colors if I like. I can make the lines thicker. And again, I'm making them thicker because they're easier to see on this video. Okay, and as I said, I will go into more detail on these indicators later. You can see as well that you have much more fluctuation than the MACD on the stochastic oscillator. But look at this beautiful setup here. Here's an example where where the stochastic oscillator dipped below 20. So what the stochastic oscillator does, it ranges between 0 and 100. And basically, the two lines are indicating a change of change. It's deceleration and acceleration. It's like putting your foot on the gas on your car and you feel it going faster. Put your foot on the brake and you can feel the car going slower. You can feel it in your body. Well, that's what the stochastic oscillator does to price. It sees that price is slowing down. It sees that price is speeding up. So when we say oversold, down here where the blue rectangle is, down below 20, that's oversold. So what I want to see is the D line crossing the K line, and I'll explain what that means in a different video. So when the D line crosses the K line and heads up, then I know, I'm hoping that we're going into a bit of a bullish attitude from a bearish attitude. So let's quickly draw another box where we saw, let's so right about there. You can see where the D line crossed the K line and the stochastic oscillator was, again, overbought, as we say. So we have an oversold situation down here and an overbought situation up here. So if we line up these 2 points, I mean, you can see the absolute perfection where the D line crossed the K line in the oversold situation, and we'll draw a little box here. And you can see where the D line crossed the K line in the overbought situation right about here. So again, this would have been a bloody good, pardon my language, a very good trade if you took it. Again, you don't have to use the stochastic oscillator in every case. Let's say you wanted to combine this information with MACD. Well, what you could have said was, and a lot of traders do this, if I look at the histogram, and in every case, it's above the 0 line, that tells me that it is bullish. So therefore, I'm in a bullish situation. And it's absolutely true. You're going to see me drawing a lot of trend lines as we go through our little journey in Forex. And here we have our trend lines, which definitely indicates a bullish indication. Okay, so that's a quick lesson on the stochastic oscillator and the MACD. Again, we'll be doing lots of different videos and different courses on trend lines, technical indicators, how to use MT4 and draw little boxes. I'll even show you how to change the color of the little boxes as we go along. So those are 2 indicators I've set up on my chart. And there's one more I like to look at. I don't always use it, but some traders do like it, and it's called the Parabolic SAR. The Parabolic SAR is really for very conservative traders. Okay, I don't like that color. It looks better on, let's change to blue. Okay, here we have a series of dots. So basically the Parabolic SAR If the dots are below price action, then it's changed to bullish. In this case, it worked out really well. You could have actually, if you were brave enough, entered a position on that. So basically, we had a reversal in price action. Price came down, down, down. We saw this reversal candle, this hammer. Suddenly, price started to change direction and went back up again. And the parabolic SAR, let me get rid of that rectangle. The parabolic SAR changed from dots above price action to dots below price action. Again, this is a very conservative strategy. We will study this more. You will find as well that this dot probably appeared after this candle. So it may have been too late for some of you, but it's a good indication to take a look at longer time frames. So if we back out to the daily chart, we can see the exact opposite of what we were looking at. Parabolic SAR is now in a very, bearish indication on the parabolic SAR. One quick thing on MACD, you'll see here that we had a huge spike in price action on gold this week. And I mentioned in my video today that you need to watch out for these things because, pardon me, when we have huge price action spikes like this, they generally throw off technical indicators for quite a while, sometimes for days. And MACD is definitely one of those indicators that gets thrown off. The stochastic oscillator very often can pick up where it left off very quickly. MACD doesn't, and the parabolic SAR as well. You can see that, why would I base any decisions on a spike like this? Well, probably not. If you were lucky enough to get in on this, good for you. So gold hit all-time highs, 2,100 and let's see what it was, $45. If I go out to the monthly chart, back to the weekly, I should say, yeah, we can see that was true. There really was no other price action that was this high on gold ever. Anyway, let's get back to our video. So here we have, and here's the setup I want to use for my my analyses for FX Street. Again, I generally wouldn't use this for trading. I'd do something different, and I'll show you my trading strategies as we go on through the weeks and months. But this is what I like to use for FX Street. So what I want to do now, I'm going to save this as a template. So we can right-click on the chart, and I will see a thing called template, and I'll say Save Template. Okay, so I'm going to call this Weekly Analysis. Okay, so now I've got my template called Weekly Analysis saved. So basically, every time I go, let's just go to a different chart. I'll show you how this works. So I'm going to go to pound dollar on my list of symbols. I'm going to click on it. So now I've got pound dollar. All right, let me just clear all these indicators. So now I've got a naked chart on 4 hour, which is my default template. I'm going to click on template, and then I'll select weekly analysis. And there we go. So every time I want a chart to look like this, I just go on to template. I'm going to repeat this, go down to weekly analysis, and there it is. And I've got some other ones that I've saved as well. Here's another one I've got called Golden Cross. And this is basically something else that I use on the daily charts with the 200-day moving out average. And again, I'll have a video on that coming up as well. So let's go back to our analysis. So what we'll do, I'm going to go back to my FX Street template, which is already set up, or sorry, my FX Street profile. And here I have all my charts in one profile. So let's go back to my default profile. I'm going to get rid of this chart. I don't want this anymore. So here I have, in this profile, I have a grand total of one chart. I have gold weekly. And you can see here it's called the default profile. So I've just shown you now how to create a template. So now we know how to create the template that we want to use for our analysis on an ongoing basis. Like I say, I have different templates for different things. If you're a scalper, you can have different templates for scalping, different templates for analyzing the daily markets, etc., etc., etc. But we'll come back. Well, I'll do a separate video on templates. But now what I want to do is create a profile for my weekly analysis. And that includes all of the currency pairs I talked about. It includes WTI oil, and it includes gold. So let's get started. So basically I'm going to go to Profiles, and I'll go to Save Profile As, and I'll call this again Weekly Analysis. Okay, so here I have my profile. So if I change profiles now, I will go, let's go to one called US Equities. And that's exactly what it is. This is a template, a profile, sorry, of US equities. It has the Dow Jones, it has NASDAQ, it has NASDAQ Trust, and it has the S&P 500. So that's my profile for US equities. And you can see down here in the bottom where the name of the profile is situated. I want to change profiles, and this does not affect your templates at all. So if I go to GBP, this is a profile of all GBP pairs on the 4-hour chart. Be aware though, if I change this particular chart to daily, the profile will remember where it was. So the next time I come back to this profile, it'll have all the charts on the 4-hour except one on the daily. So you need to be careful that what you're doing. If you change something on a chart in a template, it will not change the template. The template is exactly as you saved it. Profiles are dynamic. They will change their settings as you change them as you go along. So let's go back to the 4-hour on this particular euro-pound pair. So now I have all my pound pairs set up. In this case, there are 7. We've got euro, pound yen, pound Swiss, etc., etc. And I'll come back to that. And you'll see in my videos when I want to look, and this is really important in trading, by the way. If I want to make a trade, let's say I want to trade pound dollar. So I've got the pound as the base currency and the US dollar as the quote currency. It's really important you understand the difference. And let's say, for example, I have some indication that I can go short on pound dollar. I want to do 2 things before I pull the trigger. I want to make sure all the other pound pairs are getting weaker on the pound, and I'd like to as well make sure all the other dollar pairs are getting stronger with the dollar. So I will take a look at my pound dollar chart. Let's say, for example, I want to see where support and resistance is. Okay, I won't go through a whole analysis, but I want to take a look at to see what all the other pound pairs are doing. Well, on the euro pound, it's the opposite. Pound's getting weaker. The pound's getting stronger, sorry. If I go to pound yen, pound's getting weaker. If I go to pound CAD, pound's getting weaker. So I've got mixed. I've got pound getting stronger on euro pound. I've got pound getting weaker on pound yen, and pound getting weaker on pound CAD, which supports my theory of going short on pound dollar. So I'm not going to make a trade right now. This is not formal analysis or trading advice. I'm just showing you that I generally look at all the other pairs before I make a decision on one pair that I want to trade. And as I go along, I'll show you how to analyze them. For example, I'll show you how to trade news events. Let's say, for example, there was a big spike on the Swiss franc for whatever reason. Let's say the Swiss National Bank decided to raise interest rates, and there was a big spike on all the Swiss franc pairs. Well, I want to go on to all my other Swiss franc pairs and see which one would be the best one to trade, because it's not always going to be right across the board that every single Swiss franc pair would be a good one to trade. So I'm going to analyze all the other pairs, all the other currencies that I want to trade with the Swiss franc to make sure I'm going in the right direction. I don't always get them right. Any Forex trader who tells you he gets all his trades right is lying. But that's the way it is. But what we need to look at is set yourself up so you can make intelligent trades and also practice risk analysis. Again, risk analysis is another set of videos, which are really, really critically important. Okay, I'm digressing dramatically, so let's get back to our profile. So I'm going to go back to my weekly analysis profile. Okay, so all I have on here right now is gold. So what I'm going to do is, on this profile, I'm going to open another chart. Let's open euro dollar. Okay, and I'm going to make it my template that I like for my weekly analysis. Okay, there we go. I'm now going to open pound dollar. Again, change the template, etc., etc., etc. I won't open up all of them now. Okay, so basically now I've got my weekly analysis profile with the charts that I want to see. So let's say, for example, and I want to do this in order. So there's a way to do this. If I click on the tile button, I can now see all the charts on one. Let's add one more. Let's make it square. Let's go on Euro Swiss. Again, put the template on. Okay, so let's try that again. So here I have my tile button, and you can see MT4 says arrange windows as non-overlapping tiles. So here we are. So here we have, and if you want, you can get rid of these spaces as well. So let's do that. And again, don't forget, every time I do something like this, the profile is being saved. Okay, so let's say I don't want gold to be in the beginning. I want gold to be in the end. All I do is drag it and move it here on the bottom. I want euro dollar to start. I want pound dollar second. I want dollar Swiss to be third, and I want gold to be at the end. So all I do now is click on my tile button, and there we have it. We have euro dollar here, pound dollar, dollar Swiss, and gold. So I can set these up to include all of the particular, let's just add Aussie dollar. Okay, so now I've got 5 on my profile. So let's go back to the profile where I was in the beginning, and that's called the FX Street profile. And you can see exactly where we are. Okay, you can see, let's get rid of these. These were non-functioning charts, sorry about that. And you see how I did that. I just simply clicked on the red X. But now I can refresh this. Here I have all my charts. Okay, definitely it's too crowded to make any decisions like this, so I'm going to go back to the individual charts, and I'm going to click on, there we are. So there we have it. We're back to our euro dollar chart, weekly format, or weekly time frame, with the indicators I want, etc., etc., etc. So there we have it. That's how to set up a template. Again, take a look at our templates. Oops, excuse me. Our templates, weekly analysis, FX Street. Okay, didn't want to see that. Let's click on the scroll button, get it back there. And there we have it. So let's take a quick break, and we'll come back with our analysis. Okay, let's jump right into the analysis. Let's take a look at the actual website where we're talking. It's fxstreet.com, and the way to find the forecasts, simply click on Rates and Charts. Try that again. Simply click on Rates and Charts and go to Forecast Poll. And like I say, there are 8 Forex pairs plus gold plus oil plus Bitcoin. So let's take a look at what exactly happens. Here I have last week's analysis. So I did that last week, and this week is already expired because it's now the weekend after December 15th. So you can see here where it says updated December the 8th. So that was last week. So I want to take a look at that first. So the way we break it down, or they break it down, here's euro dollar, which is obviously the most traded currency pair that we have, or probably the most traded instrument in the global markets today. And basically looking at 1 week from the 8th, which is yesterday, 1 month, and 1 quarter, so 3 months. And if we look at all the experts, last week they predicted 25% said it would go up, 75% said the currency price would go down, bearish, and so forth. And nobody said sideways. If you look at 1 month, 24%, about the same, said bullish, it would go down, or sorry, go up. 41% said bearish, 35% said sideways, and we can look as well at the quarterly results. So if we scroll down, what we get every week is a dot plot, and you can see here the dot plots get wider as we go out. So if we look at the weekly forecast, there's a rather large dot right in the middle, which is around $1.09, $1.09 to the euro. So that was the prediction from last week. If you look at the 1 month predictions, you can see that there are some larger dots. So the predictions were spread right across from 1.1, 1.15 down to 1.025, it looks like. And of course, the 90-day outlook, you can imagine there's a lot wider variation. So the most optimistic person said $1.128 to the euro. And quite a few are very pessimistic. They're looking at a bearish indication or bearish price action on euro dollar down to 1.035 roughly. And here's my prediction. So my name is on here every week as long as I can keep up with it. So basically I said I was predicting that price would come in at 1.07 dollars to the euro. And of course I've got my monthly and my quarterly. So if you scroll down, you can see we're all in good company. There's some banks and individuals, some people that I know are also forecasting in this. And I do get comments and emails once in a while on my predictions. Again, I'll repeat, this is not trading advice at all. In my humble opinion, Friday afternoon is the worst time to do forecasting for the next week. Typically, I like to do my videos and forecasting on the Mondays. I like to do my fundamental analysis on Mondays and technical analysis on Tuesdays. And that basically gives the markets a chance to shake things out, especially if you're looking at the pound, because a lot of action and polls come out in the UK on the weekends, and that really upsets the markets. You can't do much to the markets because they're closed, obviously. The Forex markets are closed 5 o'clock New York time on a Friday afternoon, and they open at 8:30 or 8 o'clock or 8:30 a.m. in New Zealand. And then, of course, as liquidity picks up into Tokyo, Australia, and Sydney, into Europe, then liquidity picks up and the markets get flowing. And you find the peak time for the markets and the Forex markets is roughly 8:30, 9 o'clock London time. London, of course, is the biggest Forex market in the world. About 55% of the Forex goes through London. So we'll do videos as well on timing of the markets. So pardon me for moaning about forecasting on Friday, so it doesn't always work out, but here we are. Everybody here is forecasting on a Friday afternoon. So let's see what happened. Okay, before we jump into this, I will warn you that during last week, the U.S. Federal Reserve did not raise interest rates, but Jerome Powell came on and said that we will likely stop raising interest rates, and in fact into 2024 start lowering interest rates. Okay, if you're new to Forex, that is very, very significant. Interest rates are everything when it comes to currency pairs, and I'll give you a very brief overview. If the Federal Reserve or any central bank wants to raise interest rates, that makes the currency more valuable. Therefore, price action, the price of that currency will go up. If, like Jerome Powell said last week, they want to lower interest rates and stop raising interest rates, that makes the value of the currency lower. So you can see what happened. We're going to jump straight into the chart on euro dollar. And you can see this big green candle. Again, this is the weekly chart, so it may not seem like much of a move. In fact, let's go back out to the daily chart. Okay, and you can see what happened. Wednesday, Thursday, we had huge price action. Euro got stronger against the dollar. And it wasn't so much that euro got stronger, it was that the dollar got weaker. And you'll find that every currency pair we look at that has to do with the dollar, whether the dollar is the quote currency or the base currency, it was dollar weakness right across the board. So that caught all the technical indicator people off guard. But here's something that's really interesting. And this is one of the main strategies that I use when I'm trading. Again, this is the daily chart. So we've got candles representing 1 day of price action. So here's what happened. Again, Jerome Powell, right or wrong, probably right, said, hey, we're going to lower interest rates. Therefore, the currency got weaker. The American dollar got weaker. Drove price action right into this line of resistance. And I really want to point this out, how important this is. So we had this line of resistance, which is happening right now. You can see prices falling back on the Friday. Again, these are daily candles. We have the same exact line of resistance at the very same level of price, which is, pardon me, you need to take a look at it, 1.099. So let's say 1.1 to the euro. And we also had the same level of resistance back here in June of this year. Okay, so this is really, really important. Support and resistance is one of the most important levels you need to look at as a currency trader. And you can see exactly what happened. So price roared up to this level, 1.1. And 1.1 is a psychological level. When you see round numbers like 1.1, it's important for two reasons. One, it's psychological to the actual traders and the banks who are trading it, but it's also important to the computers. And you'll see here, and I'm going to explain a little bit about the high frequency trading market. You can see here that 1.1 is an important level. In fact, let's just draw another one here. And the reason that price bounced off is that some of these big banks will have clients who are saying to them, okay, we want to sell euro dollar. We want dollars in exchange for our euros, but we only want to do it at a certain level, or vice versa. So there'd be a lot of computers all over the world waiting for price to hit 1.1, and they will sell when they get to that level. So it's not just people in the good old days in a pit shouting and yelling and passing bits of paper. There are computers waiting for this level to be hit, and they will suddenly kick into action and sell euro dollar. That, to my mind, is exactly what's happened. So, and you can see what's also happened as well. We just talked about the stochastic oscillator, and look where it is. It is in a perfect position, closed Friday afternoon, overbought. The D line is touching the K line and ready to start dropping. Whether that's going to happen on Monday is anybody's guess. My guess is that it will. I'm not placing any trades on a Friday afternoon, but I'm obviously doing my predictions. So let's go back now that I've talked your ear off about support and resistance and the stochastic oscillator. And again, I'm going to repeat, these levels of resistance aren't just lines on a chart. They are important psychological levels for traders, hedge funds, banks, and they're also very important levels for all those computers that are waiting for orders to be filled. So if you consider this particular one here, which was back in November, just a month ago in this year, let's say a bunch of computers said, okay, thank you very much, I'm going to sell euro dollar, but they couldn't fulfill all the orders. So those orders are still sitting on their computers. They're still sitting in the order bank as pending orders. So when price came back, thank you very much, Jerome Powell, price came roaring back up to 1.1, and the computers again said, great, now we can fulfill the rest of the orders, or at least partially. So that's why price moves when it does. Okay, let's go back to our analysis. So I'm going to go back quickly. Remember I said that the market said that they thought that the price would fall to 1.07, including myself. Well, we got it wrong. Price actually closed at 1.08, and the 1.07 level is somewhere down here. So that happens, we got it wrong. We can blame Jerome Powell. But for those of us who wanted to go short on euro dollar, we thank Jerome Powell. So here we are. Okay, so let's go back and see what we can consider. If I'm doing my forecast, I'm going to consider that price will fall next week. And again, yeah, I've had a bit of a head start because I've seen the daily chart on the Friday and it did fall. But I also see, this is the weekly chart. This is the stochastic oscillator showing me, showing me that price might fall. And again, the stochastic oscillator is measuring momentum. It's like measuring deceleration. If you throw a ball up in the air, it will accelerate based on the force of your hand and your arm, but it will start to decelerate based on the force of gravity. And it doesn't just stop and reverse. It actually slows down. Then it suddenly hits the point where I've gone far enough. I'm fighting Brad's arm and I'm fighting gravity, and I stop, and then I come back down and I accelerate. Well, that's what the stochastic oscillator is showing us. It's showing us price is going up, it's decelerating, and then suddenly, oops, it's coming back down again and accelerating. That's what the stochastic oscillator is showing us, and that's why I like it so much. It's not 100% accurate. Things could happen during the week, and they do, and they will, but that's where we are with the stochastic oscillator. So I'm considering that price is going to fall again. And it's difficult to look at trend lines right now because price seems to be bouncing around. Clearly we have an uptrend. You can see by my blue line here that I drew some weeks ago. And I've just left it there. So let's take a look at what I thought might be happening in the next little while. So let me quickly go back to the FX Street. Okay, so I'm going to go to, it says next week. This is actually this week. Okay, so the market itself overall has said, okay, price is going to fall to 1.088 next week. It's going to fall to 1.068 in a month's time, and then probably be around 108. So what did I say? I said, and this is my prediction for the week coming. So I said price will fall to 107, let's say 108, 107.7. And I'm considering it's going to fall quite a bit for a while, but I wanted to come back. I can just see euro dollar coming back. we've got a lot of activity happening with the interest rates. We've got a lot of activity happening in the next little while with the euro. I consider that this fall in price to 104 will have more to do with the euro falling than the dollar falling. And because I'm following the fundamentals, and the scuttlebutt on the street is that the European Central Bank will lower interest rates before the Americans do. So that would cause a fall in euro dollar, okay? And then I'm seeing it coming back to 1.1 once the market settles out. The markets are fickle. They will get excited about something that's going to happen or happening now or maybe next week, and then they'll calm down and price will start to stabilize. And again, it will get back to those bank orders and those high-frequency traders and the hedge funds. So that's my prediction for the euro for next week. So we'll come back later and see if that actually worked out. Okay, so let's go to the next one. I promise I won't spend so much time on each one, but you can see where we're going with this. Okay, let's look at pound dollar. And here we have the weekly chart, and the pound dollar closed at Friday afternoon in New York at I have to take a look at the prices on this monitor, 1.2674. Okay, again, price went up because of Jerome Powell and his rumors and his prophecy about interest rates coming down. So all the American dollar pairs basically moved. So if the US dollar is the quote currency, like it is on pound dollar, and the pound is the base currency, like it is on pound dollar, then price action on the chart would go up. If it's the other way around, we'll take a look at that one next. Okay, so basically, let's see what how we predicted from last week. So what I want to do now is go to my folders, and I want to pick on pound dollar. And I want to go back to last week. What did we say it was? 1.267. So the market was split. The experts were split last week. My prediction was sideways 1.25. So if I go back and take a look at what I said, did price get to 1.25 during the week? It actually didn't. Price actually went up. So my prediction my bearish prediction was wrong. That happens. And again, I can easily blame Jerome Powell. So again, looking at the weekly charts, I see the exact same scenario, and I'm going to follow the exact same logic going into the next week and the next few months. I see the stochastic oscillator on pound dollar looking overbought. So technically it's telling me the price is going to fall. I'm less convinced about the Bank of England lowering rates. But I can also see the American dollar coming back a bit based on what's going. It's a bit of a tricky one right now with fundamentals because the Bank of England are struggling with inflation. They really are. The U.S. Federal Reserve are not struggling with inflation. They're very happy about inflation. So it's going to be a bit of a mix. Oddly enough, normally when central banks say they're going to raise rates, then the value of the currency goes up. Well, that's not necessarily happening with the pound these days. But talk about inflation going down and the economy improving will definitely drive the pound higher. So right now, the Bank of England, based in London, is in a bit of a quandary. They're not quite sure what they're going to do. It looks like they're going to taper as well. Not taper, but pause and pivot as well. But we don't know just yet. The Bank of England, based on looking at all the other central banks, are a little bit behind the eight ball. They were the slowest to get into predicting inflation coming down. They were the slowest to start talking about lowering interest rates. So I'll be honest with you, we don't know just yet. So let's take a look at what we predicted for next week. So I'm going to go to my next week in pound. Okay, so what I'm saying is price is going to fall next week to 1.2526 and fall again to 1.2515, but probably come back in 30 days or in 90 days. So I'm having the same logic with the American dollar here. So again, I'm not going to dwell on all this. You can take a look at any of these other banks and experts on FX Street. Just take a look at the dot plots, of course, just take a look at the FX Street site. So let's very quickly take a look at the next one, which is pound yen. Okay, very quickly, I'm going to go back to the previous week. Okay, this is what I was talking about. In this case, the first two we looked at were euro dollar and pound dollar. The dollar was the quote currency. So everything we talked about, euro dollar and pound dollar, were based on dollars. This time it's the other way around. If you're new to trading, and this is where you can get caught up, you really need to be able to think in pairs and understand the difference between the base currency and the quote currency. So in this case, the American dollar is the base currency and the quote currency is the yen. So if we look at prices on dollar yen, the number's bigger, basically. So we're looking at 144, 146. Recently it was 150, and we're talking about yen, not cents or American dollars. So this is important to understand. So here we had the experts saying, okay, price is going to fall. 43% were bearish last week. 29% were bullish. How was I? What did I think? I was thinking bearish. And there were two reasons for this. And again, not knowing what Jerome Powell was going to say, but the Bank of Japan were finally, after all these years, starting to talk about raising interest rates. If you follow the fundamentals on the yen, when the whole world was struggling with inflation based on the pandemic and the problems with Russia and the price of natural gas, the Japanese had the opposite problem. They had deflation, which is actually can sometimes be a bigger problem. And Japan being an export nation, it was a very critical problem. But the Bank of Japan were super, super stubborn. They did not want to raise interest rates. They were, in fact, at negative interest rates, which basically discourages banks from lending money, which is obviously a problem. They were trying to keep the value of the yen lower to encourage exports, and it simply wasn't working. Okay, last April we had a changing of the guard with the Bank of Japan. Now we got fresh blood, a new governor, and they're finally starting to realize that, yeah, maybe we need to start talking about tapering back on bond purchases and lowering interest rates. So finally, the yen is getting stronger. So let's take a look. So that's why a lot of us were considering, if you look at all these indicators, two of us actually were quite bearish three of us actually on dollar yen. So if we say we're bearish on dollar yen, that means the American dollar was weaker and the Japanese yen was stronger. It's the other way around when we're talking about a quote currency. So let's take a look at the actual chart and see what we're talking about. So I'm going to go to my profile, click on dollar yen, and that's exactly what happened. So you can see from here, and I'm going to look at a bit of history, in that we had 151 as the high. I mean, I remember when I got involved in trading, the Japanese yen, let's go back to the month chart. Probably not enough data on this chart, but you can see, well, in fact, there is. Back in 2012, the dollar yen was like 77 yen to the dollar, very, very low. And it just rose and rose and rose for many reasons. Fell down in 2016, and starting in 2021, sort of post-pandemic, the yen was rising. And the reason was there was such dramatic deflation in Japan, and there was a huge discrepancy between the interest rates in the United States and Japan, and there was also a huge discrepancy in bond yields between the Americans and the Japanese, which drove the yen higher. If you're not following all this, don't worry. Fundamental analysis is not the easiest thing to follow, but if you stick with me, I'll try to catch you up on it. And it's easy to say, and I mentioned this the other day in a video, a lot of traders will ignore the fundamentals and just stick with the technicals. That's fine. I completely disagree with that philosophy. My attitude is I need to know what's happening with the fundamentals, and then I follow the technicals. So if I'm following a technical indicator right before the non-farm payrolls every month, to me that's suicide. It's gambling. I need to know what's happening with the technicals. I mean, I mentioned the non-farm payrolls. A lot of traders, a lot of hedge funds, a lot of banks actually close their shops for the non-farm payrolls. They will not let their traders trade. They wait until it's over. Come back on Monday, guys. Thank you very much. And there's a good reason for that. Liquidity is bad, spreads are high, and you just don't know. If you're gambling on before fundamentals, big ones like that, it's not trading, it's gambling. So I'll shut up now and get back to my analysis. Here we are on the weekly chart, looking at dollar yen. Okay, so we've had an uptrend going on since January, literally. And you might want to consider there's an uptrend since 2021, which is true. Again, finally, the Bank of Japan decided to lower rates, and you can see this key level of resistance. I talk about this. This is super, super important. So this key level of resistance was at 151, and then the Bank of Japan said, okay, enough is enough. We're going to have to think about it. So we've had red candles for weeks now, and prices are falling. So we've got the stochastic oscillator, and here we have, and I talked about this earlier, MACD, the signal line passing out of the histogram. When was that? That was actually, look at that, perfect. Right at the top, right at 151. MACD gave us a bearish indication exactly at the top of the market. That hardly ever happens, by the way. And now it's been falling. And you can see I've been doing this for a long time. When I look at the stochastic oscillator and I see these ragged D lines and K lines, that doesn't fill me full of confidence. So the fact that price is falling here tells me that it's going to keep falling. And again, I'm going to stick to the fundamentals and almost ignore the technicals. The Bank of Japan are now talking about lowering interest rates. They may do it next time. They may do it in January. They may wait for April. We don't know. But when they talk about, raising interest rates, when they talk about raising interest rates, that means the currency is getting more valuable. I cannot stress that enough when it comes to central banks. And I'll say one more. I'll do a video on reading the economic calendar. And it's not just about the events, it's about the speeches that follow the events. In fact, the reason the American dollar got weaker, as you can see here, wasn't because of the interest rates, it was because of the speech that followed the interest rates, the FOMC. Okay, so let's go back to our FX Street analysis. So I'm going to go to this week. Okay, let's see what happens, because the bulk of the market were actually bullish. They think price is going to go to 141. I think price is going to go to 140. I think it's going to keep falling. But what I'm saying is that within a month's time, price is going to go back to 144, and 3 months from now, it will come back to 136. So we'll see if I'm right or if I'm wrong. So if I look at all the experts, it looks like I'm the only one who's bearish on next week, so we'll see what happens. If we look at the experts' attitude about a month from now, it looks like the bulk of them are, including myself, are bullish. In fact, if you look at this gauge, you can see that 77% of the experts are bullish on dollar yen, and 23% are bearish. So we'll come back in a month's time and see if that was true. So I'm not going to do this in-depth analysis on every single pair because this video would end up being 2 hours long. But let's carry on and see how we're doing. So I hope I've given you a flavor for what to look for with the way I and others look at the analysis for our FX Street on Friday afternoon. Again, I cannot stress this is not trading advice, but it's important that we all take a good look at the markets once a week. So let me quickly go forward. The next pair we look at is dollar Swiss. Okay, so basically the markets are saying, let me make sure, December 15th, this is the analysis that was prepared yesterday. And it looks like everybody is saying that dollar Swiss is going to go down. So that indicates obviously dollar weakness. When dollar Swiss goes down, the dollar being the the base currency. And in a month's time, the market is saying that, or the experts are saying that the dollar Swiss is going to go back up. So we can look at the dot plot. We can see down, up, down again. I'm saying that price is going to go to 0.86 next week and then probably come back up to 0.9. So I'm having the same attitude, the opposite attitude to dollar Swiss than I am with euro dollar. And there's a reason for that. And I'm going to show you on the chart in 1 second. Let's go to dollar Swiss. Okay, here we can see these candles, and we call this railway tracks. These candles are almost identical, bearish, bullish, bearish. But I also see the stochastic oscillator very oversold, which is the exact opposite of what we saw earlier, especially with dollar yen. Okay, so I'm considering in the short term it's going to go up, but I really don't like the looks of it. It's a very ragged stochastic oscillator. But I am considering that in a month's time, or 3 months' time, I should say, that price is going to go back about here. And again, I'm basing this purely on my fundamentals and on the technicals. One thing you need to understand now that the markets are settling down, the Swiss franc and the yen have always been considered a safe haven. So very often, if times are bad, this is before the pandemic, a lot of money would flow into the yen, a lot of money would flow into Swiss francs. That's been upended by the pandemic and the war in Ukraine. It's starting to come back now. What you will find as well, though, and let me take a look. I'm going to go slightly off topic here. I'm going to go back to euro dollar. Let's go to the month. I don't know if this is on the chart or not. Yes, it is. If I go back to 2008, you can see this massive price action. So this happened at the fall of Lehman Brothers, which basically, in fact, that was right about here in 2009, wasn't it? So price quickly, you can see the volatility over these couple of months. So basically, what happened was the euro dollar went up because there was so much volatility with people selling their shares, going back to euros or going back to American dollars. We'll analyze that one day in a separate video. Okay, let's quickly look at Aussie dollar. Okay, here we have a very interesting situation on the weekly, and I really want to look at there are a few things happening with the Australian dollar right now with their economy, but it's a bit hit or miss right now. But I also see it from the technical side that the pair is actually overbought, and price action is bouncing off an upper trend line. And you can see, you'd have to be blind not to see this beautiful downward trend that started in February of 2021. So we can see clearly what's been happening here in terms of the Australian dollar going down against the American dollar. MACD doesn't really help us. It's been a bit, looks like it's consolidating, to be honest. But let's take a look at what I said for next week on the Australian dollar versus the American dollar. So we'll quickly go to my Google profiles. So the market is quite mixed right now on next week, but they're very, very bearish on 1 month from now, which is pretty much exactly what I'd said. So I'm predicting lots and lots of bearish activity. So what I said for next week was price will fall to 0.657 and eventually will fall within 90 days to 0.64. So if I quickly go back to our chart, so where is 0.64? It's roughly about here. No, it's not. I lie. So what I'm probably thinking at the time is that price is going to fall next week a little bit because I can see it bouncing off this upper trend line. Don't forget these are weekly candles, so 1 month from now would be 4 candles. So what I'm considering in a month's time, it'll be down here. And I'm also looking at a rebound to 0.64 in 3 months' time, which would be about here. So you can see the logic I'm taking. What I've done, I've extended this trend line out to about here. So I'm considering price will fall to here next week. I'm considering price will fall to here. This blue rectangle is again in a month's time, but I can also see price coming back to the trend line again, and maybe it'll fall again once it bounces off this trend line. Again, anything could happen. The Australians could raise interest rates. There could be massive inflation problem right now, which there is in Australia. Again, but we will analyze that as we go. So typically I take the exact same attitude with the New Zealand dollar versus the American dollar. So you can see the trend lines are a bit more ragged, but you can see there's also incredible similarity between the New Zealand dollar, and the Australian dollar in terms of what's been happening. Price has bounced off the upper trend line. The stochastic oscillator is overbought and it just looks just as ragged. So I'm considering the exact same scenario, 1 week, 1 month, and probably 3 months down the road. So you can see where I'm going there. Quickly on dollar CAD. Okay, so here we have the exact opposite situation, and there's a reason for this. If I look at New Zealand dollar, American dollar, the New Zealand dollar is the base currency and the American dollar is the quote currency. If I go to dollar CAD, it's the other way around. The American dollar is the base currency and the Canadian dollar is the quote currency. So these numbers down the side are actually Canadian dollars, not American dollars. Okay. So again, we have the similar situation. You can see price fell dramatically. This big old red candle this week, and again, Jerome Powell did it for us. So we have the exact opposite situation with the stochastic oscillator. You can see MACD is popping out of its shell. The signal line is exiting the histogram right about here. But again, as I mentioned earlier, as I mentioned very often, when you have a big move like that based on a very quick either fundamental issue, MACD doesn't always behave. You need to give it another week or so to settle down. But what's really important about the Canadian dollar, and again, please follow the fundamentals, Canadian employment, Canadian CPI, Canadian sales figures. The Canadian dollar is really, really driven by the price of oil. It's that simple. And that hasn't happened in the last little while, but let's take a look. I'm going to jump right ahead to WTI. So basically the price of oil has been falling as of late. We have a couple of things that are happening right now. OPEC, when OPEC meet, they're really sort of indecisive. They're getting back to sort of infighting within OPEC about production cuts. But long story short, the price has been falling. Okay, so to be honest, I'm going to toot my own horn. I've been one of the few that have predicted this fall. And full disclosure, I've actually been trading WTI and quite happy with my results. I closed my positions recently, made a couple of bucks on that. But I really am starting to pay attention now to the technicals. And it looks like WTI on the weekly chart is looking very, very oversold. So I'm going to be very careful about predicting any more price falls. And you can see here this line of resistance, which is, and pardon me, I need to take a look at this, $66 a barrel. And you can see that this line of support, I should say, pardon I've got my terminology backwards. This line of support is quite critical. It was actually a line of resistance back here in February of 2021. So you can see right now that $66 is a key level. And I can tell you from interviews with CEOs of oil companies, especially in the UK, $66 is very important. About the $60, $65 range is when the oil companies start to lose money. They need the price of oil to be higher than $66. If you talk to Aramco, they want the price of oil to be about $100 a barrel, even though they actually make money when the price is $35 a barrel. So you have these different oil companies and governments and within OPEC sort of fighting to take control of the reins in terms of where prices are going. And obviously supply versus demand is critical. If there's too much supply with oil, then the prices will go down. If we're undersupplied and the tanks are getting lower, then prices are going up. Again, I'll be going through lots and lots of videos on how to trade oil. and the Canadian dollar, and they do go hand in hand. I'm going to prove that to you in the next few weeks and months. So let's take a look at what I said on the prediction. Oops, pardon me, I've going a bit crazy. Here we are. So let's quickly go to WTI. Okay, so look at all the experts. The markets are saying within a week prices are going to go down, and now they're saying within a month price will go back up again. So let's see what I'm saying. We'll see if I'm right. So my attitude is that price is going to continue falling. I did this yesterday, so clearly I'm thinking about this line of support breaking. Let's see what happens. So I'm saying that price will fall to $66.70. I'm saying in a month's time price will fall to $62, and I'm saying the price is going to fall in 3 months to $60. I don't want to talk about politics here, but if price keeps falling, Joe Biden and the Democratic Party in the United States will be doing cartwheels because they need inflation to come down. They need the price of gas at the pumps to come down because the primaries and the caucuses are coming up in the next few weeks and months. And this is very, very critical to American politics. And of course, even across Europe, inflation has been a big problem. The Ukraine war has been a big problem for the price of petrol. But as you can see, it's been coming down, which is a very good thing for everybody, for individuals buying gas at the pumps, etc. So let's take a look at that, and we'll just follow on our weekly analyses to see where we're going with WTI. Okay, that's enough for now, I think. So please feel free to take a look at the FX Street forecasts. If you want me to do more of these, please feel free to comment on this video in the Facebook page, on the YouTube channel, and anything you want us to take a look at in these channels, please leave it on the Facebook page and the YouTube channel, and we will oblige. So keep looking out, subscribe, like, and that way you'll get indications of new videos that pop up when they do. And I look forward to seeing you again. Thanks a lot, guys.